Welcome back to another stock market open live stream. Today, bad audio.
There we go, and I fixed the audio. I caught it early today. Anyway, welcome back to another Stock Market Open live stream. So today we've got futures down a little, yields up a little bit. This is all in anticipation of Powie Wowie. Powie Wowie talks today. I think that's going to be the most critical thing that everybody cares about today. Powie Wowie is, expected to hopefully talk down yields just because he's adding more tightening to the economy. It's a little weird. But the uncertainty, I think, is leading some, to some price action to the downside as people kind of just sell everything. But anyway, it does look like you have Michelle Bowman still expected to yap her trap in about 24 minutes. So we'll get to see what she has to say about rates and inflation. We expect that she's going to be on the hawkish side, right? Michelle Bowman is was the one dissenting vote against this, a 50 basis point cut, and so we'll be getting some insight from her as to what she thinks about the potential for a second wave of inflation or otherwise. Keep in mind, we have the port strikes potentially coming as soon as tomorrow. I have a video coming out breaking up or breaking down the complete port strike video and situation, and I'll post that right after this open live stream here. So we'll take a look at that. This is also the last trading day of the month. So sometimes the last trading day of the month, you could tend to see some repositioning, some rebalancing. So we'll see. It'll be really interesting to see. I do think there are going to be a lot of folks who look for buy the dip opportunities. Maybe we'll even see some buy the dip opportunities going into the election. It's possible that uncertainty around the worker strike could lead to stocks to falter. Is it the black swan everybody's been waiting for? I don't know. We'll see. Again, I'll have a video in detail coming out about that and sort of my opinions around it. And otherwise, that'll be out after this open live stream. Okay, so with that, let's take a peek here at some of the movements early in the AM. See how things are going. Okay, dokie, 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 dokie. Oh yeah, we had Israel, by the way, this morning strike with raid groups inside of Lebanon. Technically, these are boots on the ground in Lebanon, which is different from the airstrikes and the 2,000-pound bombs that have been dropped over on Hezbollah targets. But it is... oh, that's weird. It is something that a lot of folks are worried about is going to escalate into a full-on ground invasion by Israel with tanks rolling over the border. I hate to say it, but I actually think that's quite likely. Yeah, so at the same time as you have this potential port strike, you're going to be facing this geopolitical escalation, which is not great. Can you tweet Elon Musk and ask for Starlink in areas hit by hurricane? Well, FEMA, there was just a story about how FEMA is already deploying Starlink in hurricane-hit areas, and it seems like Elon's already been very responsive to supporting the hurricane regions with Starlink and potentially better connectivity in some of those areas. So it seems like he's already on it. It's actually kind of like good on Elon. It's kind of a fantastic tool that he's making available for folks, especially in cases like this. I mean, really, I grew up with hurricanes and any kind of Category 4 or 5. We always said we would evacuate for. The issue that you face is people get evacuation fatigue. I never ended up facing a 4 or 5 when I grew up in Florida, but I faced a lot of 1, 2s, and 3s, and obviously tropical storms. Tropical storms are a joke. The issue with the ones, twos, and threes would really only come down to spawn tornadoes. It's kind of cool, but well, maybe it's not cool, but hurricanes can spawn tornadoes. Usually in the top left quadrant of the circle. Top left quadrant is usually the most dangerous. For tornadoes, at least. The problem is when you get to a 4 or 5, just the level of devastation and storm surge you get is highly unmanageable. And I think a lot of people believe that, they can stay back and defend their home or whatever. I generally think that's a very bad idea, mostly because people get evacuation fatigue and then they don't evacuate because it's exhausting to leave all the time for a 4 or 5, although those are less rare or less common. There's really nothing you can do at the strength of some of these storms, these 4 or 5s. People have been dying to trees falling on their homes, dying in their cars, dying to storm surges. I see videos of people like, oh yeah, we'll just go in our attic. Okay, well, what happens when the water levels rise above the level of your attic? Now you're trapped. It's really devastating. Really sad. Hopefully that all gets cleaned up. But yeah. Anyway, so okay, so let's see. Okay, we are at month end. Rebalancing could occur now or tomorrow or both. So it's possible you could see stocks and bonds move on that. Obviously over the last month, bonds have lost value and stocks have gained value. So you might expect some rebalancing there. Stocks up in last month and bonds down. So some rebalancing possible. Okay. We've got Dish and DirecTV merging. It's interesting. We talked about the Israeli raids. Yeah, a lot of sort of combined issues at the moment. Well, you had good news on the Atlanta Fed GDP on Friday, putting us at 3.1%, which was great. A lot of people wondering, geopolitically and just nationwide, it seems like there are some real issues. I'll write these. Let's list them out. Big issues right now. So you have Israel, Lebanon, Iran, Palestine, not to forget them. Then you have Russia, Ukraine, although markets have mostly ignored that. Then you have Chinese economic risk. Will stimulus be enough? You have the shock in Japan following the new PM. So will that spill over? Their stock indices down like 4.5%. Obviously, you have the election in the United States. And then you have the port strike. And then you have fear over unemployment. Especially fueled by AI. Yeah, somebody says can't see the screen. It's because I'm not sharing the screen. So let's see here. Yeah, I have a port strike video coming out after I post this video, or after we do the live stream. You'll have a full video. Somebody here says QQQ down at least 15% within a week. Rebalancing just an excuse. That's a big drop. You would really have to have really bad job numbers there. Mother Nature always wins. Yeah, no kidding. No kidding. Did you see Elon's latest anti-immigrant rant? I don't understand. I mean, I think at this point people kind of just tune out his politics. But it's obviously pretty clear at this point. what his POV is. But no, I honestly, I really just don't look at Elon's stuff anymore. Like, I press the, like, don't recommend these posts to me, so I have to, like, manually go look. Mostly just because it's just, like, I don't really care about Elon's opinion on all these politics. So, okay. What else here? Now you have, I'm Doug says, now I have 2 rental properties. I just finished renovating. Oh, congratulations. That's great. Could the hurricane be the black swan for the jobs report for October? You know, those generally get adjusted out, right? They try to make adjustments for those, but it's possible. Why'd port strike be a black swan event? Well, I mean, when 50% of your shipments in the United States come to a halt, you better hope companies have built up some inventory. I don't know who Iguadola is, but Ali says, who needs Powell? I just called my broker. I told them to sell everything. Why do I doubt that? A Boeing strike, port strike, and now a hurricane. I mean, there's always going to be drama and stuff that goes on. You know, the question is it enough to actually move markets? Not necessarily. I mean, Chinese stocks are doing exceptionally well right now. Look at NEO, for example. NEO's up 14% in the pre-market, and that's after being up 12% on Friday. So NEO's really like momentum memeing up, which is great in the short term. I don't think it'll last from a fundamental point of view. I mean, you've got Tesla down 0.5% right now, sitting at about 259 under that 260 line. And then another one to look at is Stellantis. Stellantis is down about 13% as they suggest greater industry challenges, weaker demand, problems in China, problems in around the globe. You know, they make like Jeep and Chrysler and Dodge and stuff like that. Their margins are getting screwed. And that's, I think, a lot of what you're going to see with this port strike as well. Is just the damage to margins at companies. But, yeah. We'll see. Again, I'm going to post a port strike video in about an hour or so. Let me see if we have any data coming out today. I think Bowman's about 12 minutes away. And so we have at 6:45. No, not really. Chicago PMI and Dallas manufacturing. Yeah, both of those are pretty boring. And both of those have, I mean, Chicago PMIs have a little bit of a higher relevance to being able to move the market, but I don't know that they're as critical as what we get tomorrow. Tomorrow we'll actually get JOLTS and ISM prices paid, new orders, employment. So I think that'll be a little bit more valuable to markets. Today, the biggest mover is going to be Powie Wowie. Obviously, I'll cover Powie Wowie when that time comes. Okay. So, let's see here. Let's see what the Doomers have. Oh, the Doomers. The doom and gloom. Powell. Oh, they delayed it 5 minutes?
The question is how many 50s can Powell pull off, right? So if you look at the dot plot and you take it at face value, which I would recommend you don't do, but if you did, then it would say that they're not going to do any more 50s. Right? We think they'll do one more, but each one that Powell pushes through, we now have a strong sense that he's more dovish than the rest of the committee. it's going to be harder. They're going to face more resistance because each one you do, you're telling the markets that we're not going to stop, and you're getting closer to neutral. So maybe you don't want to do too many. So our base case is one more 50 and then back to 25s. But honestly, everything's on the table for this Fed. You could get to 25s if the jobs data are good. You could get very, very fast cuts if the jobs data deteriorate further.
What are you focused on this afternoon? Just a final question. What are you looking for from the Federal Reserve Chair?
I think he's going to be pretty non-committal. There's 2 more jobs reports before the next meeting. He really, really wants to keep his options open. So it's going to be data dependence. You know, he probably used the word recalibration again, which again for us, if you're recalibrating, why only do that one extra 25 basis point increment, right? You want to do at least one more. But he's probably going to talk about recalibration, and he's going to mix this very optimistic message about the economy with a more dovish message around, you know, we'll do what it takes to accommodate the labor market.
2 payrolls report, I think 1 CPI report, and a presidential election in between the next decision.
Yeah, it's going to be really tricky. You got to imagine that if he lays the groundwork now for, we're going to dove, that will just, you know, take away a lot of the uncertainty and the potential
Imagine if he actually
accusations
spoke like that. We're going to dove. Aditya, it's good to see you. Aditya Bhavik of Bank of America. That would change things up a bit. Kathy Jones joins us now from Charles Schwab. Kathy, your call has been, not for him saying that, but for lower yields in the bond market. Kathy, are you still committed to that call that yields can edge lower from here?
Well, I think they edge lower. I think much of the move has already taken place, particularly as further out the curve you go. So we're looking for a bull steepening. That is, you know, yields moving lower, but much more at the short end than intermediate or long term. We had a 375, 380 target for the 10-year. We're here. We're just sort of churning around. So we need to see a catalyst for yields to move significantly lower.
Yeah, and that's going to be jobs or CPI. Those are going to be your big catalysts. I think she's right. I think, you know, you get a really recessionary jobs report, or if you get bad data this week for whatever reason, yes, you will have a very, very rapid repricing in yields and potentially a plummet of yields. And if yields plummet enough, you could get a yield curve that's so steep that you're at, you know, recessionary levels again of that 50 to 90 basis points. Maybe we'll be able to skirt that without a recession, though. Right now, markets are pricing in a 38.9% chance of a 50 basis point cut, which is actually less than a coin toss right now. You know, so not yet. Someone here says TMF and TLT. Yeah, just be careful on TMF. The triple leverage make it very hard to get back out of the hole. Good morning, Kevin. Help a brother out. I want to smoke what the 15% QQQ drop guy in a week is smoking. Yeah. I don't see that as highly likely. I think even if you had a rough market, it's more likely to occur over the span of 4 to 5 weeks. But yeah, something like that, of course, is possible. The JOLTS report's tomorrow. Yeah, you could definitely trade into it. Oh, CCL reports this morning? Oh, okay, well, let's take a peek here. Okay, Carnival. Carnival cruise lines. Are you sure they report this morning? Because it might be tomorrow. I don't see it yet. They do report today. Are they after the bell? No, it does say before the market. Yeah, just not out yet. All right, well, Bowman's about 5 minutes away from talking. Let's listen in here for a moment.
Increase in inflation and probably weakens confidence in the U.S. in terms of policy. That would be a concern. It may have a counter effect of actually slowing the economy at the same time. So it could be quite a bit of volatility associated with that. And I do think one reason longer yields are not really moving very much is partly the economy is doing fine and there's no reason for them to crater. But also, there's a lot of uncertainty about policy. When we get back in January, maybe we'll know some more when we know the composition of Congress. But there's a huge amount of questions about where we're going in terms of policy.
At 1:55 this afternoon, the Federal Reserve Chair, as you know, Kathy, is speaking at a conference in Nashville. There is a Q&A, as Lisa indicated a little bit earlier this morning. Kathy, are there any blind spots left? We've heard from so many Fed officials in the last week. What's left to discuss?
Yeah, it's hard to imagine he's going to tread any new ground in this speech. I think he'll probably be very clear that things are going well. We do have a great soft landing scenario right now. He'll probably warn about some of the risks ahead and say that the Fed's attentive to those. So I don't think he's going to go off the road here in terms of what the exit strategy.
Nah, this is his chance to dove. He's all alone. He's not beholden to anyone. Dove, Powell, dove.
Argue with things when they're going well.
It seems like people aren't really expecting much from this week. I've heard from Brian Weinstein earlier, who said it's going to be boring. We're going to trade in a range until we break out. And we could break out to 550, and we could break the downside at 325. How much do you expect something to change with NFP, non-farm payrolls on Friday, given the fact that if you get a more negative print, you could start pricing in a very different outcome for both the Fed and for this fictitious thing that no one's ever seen, the neutral rate?
Yeah, well, we are looking for something on the lower end of the range, the consensus range, and I think that is a reflection of the fact that we've had those downward revisions, significant downward revisions, which, they tend to move with the trend, and the trend is slower. So don't think that 110, 115 is out of the question. It's below consensus. It's not a disaster, but it's below. And I think that could break us out of a range. Obviously, if we got, 160, 170, 180, something like that, that would send yields back up to close to the 4% area, probably on the 10-year. But I don't think we're probably going to see anything too dramatic, probably weaker rather than stronger, which is why our bias is still towards lower.
Okay, well, let's take a look at some of the movers over here. Not too much new information over here. But I do think this is Powell's opportunity to dove because he's unrestrained from some of his other Fed members there. Something else to keep in mind that tomorrow we actually start providing services at StockHack. So if you're looking for a financial advisor to hold you accountable that can also help you with real estate, consider hiring my office, which basically means you're hiring me at stockhack.com. It's going to be a great service. We're really excited about building a sort of a long-term relationship with everybody. And we've got a lot of folks to start working for over the next few days, so it'll be fun. Okay, so what do we have here? ARM's down 3% in the pre-market. You've got NVIDIA down about 2.7%. NVIDIA's kind of been struggling a little bit with, look at this trend line that you have right here. Well, I don't even remember when I did this trend line. Did we do this on Friday? Maybe we did. But you look at that, you're just getting, you're sort of in this pattern here of lower highs. That's almost the same thing that you're seeing at Bitcoin, really. Jump on over to Bitcoin. Here it is. Look at that. It's trying to climb above the 63,840 line. But look at it on the day chart. Just lower highs. And you kind of just keep getting rejected here on Bitcoin. This is a little bit of a toppy feeling that markets are in right now. A lot of folks thinking, hey, yes, stocks have hit all-time highs on the SPY. The Qs are almost back to there. The question is, will we be able to break some of these highs? Today it looks like we're going to have a little bit of a reset backwards where you don't get some of that breakthrough like you're getting on the SPY. So you see the SPY has done phenomenally here. Really, really interesting. In fact, let's go draw a little bit here. If I go draw from here to here, And let's make this a white line, or common line, just as we test it out. Somewhere around here. A little hard to place. It's pretty good, actually. Look at that trend. Yeah, somewhere right around there. There we go. That hits support, 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 support. Becomes resistance, becomes a resistance. Still a resistance over here. But I mean the trend is pretty clear here. I don't know why I hit that. That was a mistake. But very similar to the trend we had leading into sort of the V-shaped recovery, if you will. The Nike swoosh, the volatile Nike swoosh. Yeah. And the Nike swoosh will keep going absent a recession. You know, I'm still a recession bear, mostly because of the signals that we face on, you know, ISM's manufacturing services, inverted yield curve, the trend of unemployment and job openings, the potential for over-tightening, the fact that we're tightening more in the face of having lowered rates. Bizarre. But anyway, we shall see. We shall see. Okie dokie then. Let's go back over here. Okay, what is this? Social media failing to curb hate? Or are they going to talk about Elon?
Slur. So we simply ran tests to see how did a platform respond when an ordinary user reported problematic content versus through their trusted flagger programs. These are the established channels they have with organizations like ADL. So in brief, it took over a week, but when using the regular channels that someone like you would do, if you flagged bad content, nothing happened over a week. When we used the trusted flagger model, about 60% dealt with the content was dealt with. But Andrew, that isn't nearly enough. So, but hundreds of millions of people use these platforms, and they need to be safe from hate. Very simple.
Let me just understand this, though. You're measuring how long it takes for this stuff, once it gets flagged, to be eliminated, or how much of this stuff people are seeing before it even gets flagged?
Well, we do both. Our Center for Technology Society this time looked at what gets dealt with when it is flagged. So that's what this was about. If you or your friend or a college student or an ordinary person flagged clearly violative content, what happens? And unfortunately, Andrew, the answer is nothing. For the ordinary person, nearly not enough is done. Now, I should be clear about one thing. This platforms, nearly all of them have strong policies in place, but they don't enforce them. It is the lack of consequences that needs to change, and it needs to change now.
Can you answer the first part of the question? And I don't know if you've looked at this before, just about what people are actually seeing before they even report it. If you were to grade these platforms, how would that look?
It would be very, very bad. So especially since 10/7, we've seen state actors, non-state actors, ordinary people flood these platforms with misinformation and abuse. Now, I will share that tidal wave, Andrew, there are some good examples. So this weekend, Instagram took down a post that was published by the SJP, Students for Justice in Palestine chapter at the University of Michigan, that literally called for death to Israel, burn the colony to the ground. I mean, that is clearly an incitement to violence and wasn't appropriate. But, you know, the vast majority of the time, Andrew, the platforms simply do nothing.
But how would you, but if you're giving X an F and Facebook and TikTok a C, which is the best rating for getting rid of the stuff, would the grades be similar for what people are seeing initially? I ask because there's been a huge question mark about, for example, TikTok, and you talked about government state actors, and whether the...
Little interesting. I do think it's interesting, this idea of like, hey, you know, why is it that when we ask, y'all take stuff down, but when people ask, y'all don't, in terms of, you know, things that are actually illegal, but should be the same standard there. Okay, Bowman, core inflation still uncomfortably above 2%. I mean, this is literally what we expected her to say. Bowman repeats same remarks as previously. This is so dumb. What, like, Bowman, as expected, says nothing new. Core inflation still uncomfortably above 2% target. Okay. Markets don't care about Bowman right now. Nothing. No move. No move at all. Nothing. All right. Oh, let's see what they say here. Same thing.
It was quite a finish, and it was, as they say, an instant classic.
An instant classic, one of the best. Mike, thank you, sir. Mike McKee on the Federal Reserve, a sprinkle of football, and looking ahead to Chairman Powell and payrolls Friday. Coming up tomorrow, here's the lineup for you. Peter Chu of Academy Securities, look out for that. Lots of thoughts, very, very unique, original thoughts on what's taking place in China and what won't happen for certain parts of this equity market. We'll catch up with him. We'll also speak to Seema Shah of Principal Asset Management, Lindsay Rosner of Goldman Sachs, and Erin Brown of PIMCO. I'm hoping that Lisa might be able to speak. Stay tuned.
I can speak.
You're going to be all right?
I'm going to be so good.
Is he going to dove a little bit later?
Or is he going to hawk?
Is he going to hawk?
Moderate?
Stay tuned on Bloomberg TV and Bloomberg Radio.
Is he gonna dove or is he gonna hawk Tua? Oh no. Oh no, no, no. Alright. Port video is scheduled to go live at 7. Yes. Yes, it is. So, should we do 7? I think 7's fine. Maybe 6:45. Yeah, let's do that. Let's go 6:45. And the port video will be live. Alright, good. That's done. When is Powell speaking? 1:55 p.m. Eastern. So, how many hours away is that? 5? It's like 5 hours away. Yeah. So, 5 hours. I think she's giving a speech somewhere. It says deliver speech in Charleston, South Carolina, but there's no feed for it. And seems to have the same... yeah. Same commentary. So nothing new there. As expected is becoming a boring trend. Yeah, no kidding. X has turned into an SH9T hole. You know, I uninstalled it again. I kind of just... it's actually the most wonderful thing, how little I look at it now. The tough thing with X is you really have this... Like, X is just a perfect platform for spreading short, misleading snippets of things. Because the time it takes to actually properly provide context is always going to be more than a tweet, or post. I mean, the same is frankly true on, like, TikTok or a short video or whatever. It's generally why I'm not the biggest fan of posting shorts. Because you just can't you just can't, how should I put it, explain a topic or context fully in that time frame. So I don't know. I'd prefer to read or watch a video or listen to some audio of something else. Context is just so important. All right, let's see here. Looks like Musk is going to meet the SEC this week. Okay. That's not really news. I mean, I guess it is, because he's been dodging them. China and the US light a fire under the world stocks? Yeah. What else here? Okay. What else? What else? What else? Effective Fed funds rate. That's boring. There's really nothing from the suits. I'm kind of surprised by that. A little boring here. Higher mortgage duration, maybe macro risk in UK. Fine. Traders are getting creative to avoid making US dollar call. Here, they're talking about the auto problems we talked about with Stellantis, probably.
And this on M&A Monday, DirecTV and Dish agreed to combine in a deal that will create the biggest pay TV provider in the U.S. All that and more coming up, but let's take a look at where markets are trading 30 minutes until the bells ring. As Matt mentioned, not too great on this Monday. Of course, we're coming off of several consecutive weeks of solid gains, seeing some of the steam come out of the market right now, out of that rally right now. Even with that big run in Chinese equities, you're not seeing that good vibe music over there translate into the U.S. market. The S&P 500 currently down about 0.2%. The Nasdaq 100, your big tech names, which have been leading, currently down about 0.3%, and still a little bit of a sell-off in the bond market right now, Matt. You're not seeing that haven rush necessarily. 10-year yields currently up about 3 basis points.
All right, in terms of the runs that we've seen, Mohammed El-Arian, a Bloomberg opinion columnist and the president of Queens College, Cambridge, highlighted this chart here on Twitter, showing the S&P 500 has put up its best first 9 months of the year since 1997. The index is up more than 20% year to date, boosted by the 5th consecutive monthly gain in September. The S&P has gained for 10.
He says, I saw billboards along the interstate advertising for Starlink. Thought that was interesting. Yeah, I think that's actually really cool. I mean, they have a lot of product, and they just lowered the cost of their Starlink Mini, I think, is lower. One of them they just lowered the cost of. Yeah, I saw some ads. It was like $299, that with some price reductions or whatever. Oh yeah. They just reduced it to $299. That's funny. It was $499. And they just started a sale to push it down to $299, so it's like $200 off. I have it. I bought it at $499, like 2 weeks before the price cut, of course. I have it just in case I need to like upload a video somewhere random, so we have it in the plane, and so we could just kind of like deploy it wherever we are. But I don't know. It's I don't think it's as extremely upload capable as you would expect. It's more download functional. All right. So what else? Chinese stocks up most since 2008. Chinese stocks have been doing well here on these stimulus hopes. Question is it going to be enough? That's the question. Because they've got a crazy economic depression, basically, on their hands. They've been complaining about it for a very long time. And at least in the near term, the stock market's like, oh no, everything's solved. Look at like Baba. But dude, Baba's at 107. Oh my gosh. Look at that. It's like straight up. That's freaking crazy. So I think, let's see here. Baba. Yeah, we got our stimmy this over here on, what was it? I think the 24th. It's just been straight up every day. So it's really incredible. Now the question is, will it hold? Look at that. NEO's now up 16%. And you're probably getting some form of like a short squeeze and some form of euphoria over stimulus here in China. I am not convinced it's going to be enough at all, but hopefully it is. Some people think, oh, China's going to go back to exporting, inflation. No. Very unlikely. Very, very unlikely. They have so much extra capacity. Any kind of stimmy here is just trying to create a floor. Hey, look, Mike Wilson's up.
I think everybody was kind of expecting 25 right up until the last minute. And so it was still an upside surprise. And we had written about this. We thought 50 going into the meeting, if they could convey that it was not being done for growth concern reasons, would be a positive. So we got that, checked the box. And I don't think that was a shocker, but it was a positive event. And then we got the China stimulus. But that came in two pieces. Don't forget, right? It came with a monetary stimulus initially. And I would say most people, including us, were like, well, that's interesting, but that's not going to do much. We need fiscal stimulus. They're in deflation, right? We're not going to get any action in the real economy. So then, of course, the policymakers came in because they listened, and they said, okay, we'll do some fiscal too. And then we got this massive move. So we've had a 20% plus move in 3 days, which I would say very few people captured, all right? The other thing you have to think about, why is it up so much today? Well, Japan sold off sharply over the weekend. So I think, China has been a source of funds for the Japan trade, for the India trade, all the other EM countries that have done well. Okay, and now you may see some reversion back, but that feels pretty overcooked to me at this moment. What we care about in the U.S. is the following. Is this going to change the trajectory of growth in the U.S. in a meaningful way? And the answer really is no. It can maybe get some excitement in things like materials, some of the industrial stocks who have direct leverage to perhaps a China stimulus of some kind. But beyond that, I think we need to see the labor market get better in the U.S., and we need to see the policy changes from the Fed have an impact on it.
Yeah, that would actually make me bullish. People often ask me like, oh, Kevin, what would make you bullish? If you actually started seeing... if you started seeing jobs go up, like, a real increase in a meaningful increase in jobs, I think that would be really good for the bull case. Car for Coin says when bullish. That's when you have to see jobs meaningfully rotate up. Can you show us chart volume RSI before you make a day trade? That way we can make more actionable decisions. Thanks for the insights. Thanks, Curious George. Well, it depends. I mean, sometimes trades are fleeting, right? So you have to move rapidly, and the idea of like, oh, let's screenshot all these 20 different things or whatever, and then upload them and post it. It just delays action. I mean, I suppose you could always post the idea, then put in screenshots. So maybe that could be interesting.
This is not abnormal. And let's take a step back. This is what the Fed was going for when they raised rates. Once again, the big question is, can they arrest the downtrend, stabilize, and then see labor markets actually improve next year? We don't know the answer to that. We're going to get 2 labor reports before the next next Fed meeting. We're going to get an election, which I think is probably slowing hiring in the short term, just because there's uncertainty around that. So yeah, it's going to be an interesting October, no question about it.
You also point out that you say earnings revision breadth is the best proxy for company guidance. And what exactly do you mean by earnings revision breadth? It's a little too much jargon for my mom. Hi, Mom.
Yeah.
And, what do you want to see and what is it telling you?
Well, that's by design, Matt. We have these special terms, that only I know the answer. But no, earnings revision breadth is very clear. So it's the leading indicator for earnings revisions. So when I say earnings revisions, I mean, are earnings going up or down? And revision breadth we look at because that tends to be a leading indicator for whether it's going to be up or down. Revision breadth has been basically flat now for the S&P 500 for quite a while. And for the Russell 2000 and small caps, it's been negative. That explains a lot of why smaller, low-quality companies have underperformed, because revision breadth and the earnings revisions subsequently have been poor. So now here's the thing for October. Typically, seasonally, revision breadth is negative going into third quarter earnings. Why? Because fourth quarter estimates are always too high. That's why stocks tend to not trade great in the first half of October. So we'll see if that pattern is, changed. If we get positive revisions in the next 2 weeks, boy, that's going to be a real big positive, because that would be going against the seasonal trend. I expect them to be negative. The question is, will the market care? Because that's normal. We'll see. It's going to be, once again, a very idiosyncratic earnings season like it has been the last 2 or 3.
Well, that leads me to the question. We hit 42 record closing highs in the S&P 500 last week, Friday, and to today you have seen a cooling of that upward trajectory. Is there any more upside left in the S&P 500 for the rest of the year once election volatility cools up?
I mean, we wrote about this weekend, quite frankly. I mean, this is our bull case, which is that The amount of policy stimulus, okay, has been tremendous, particularly in the U.S., both fiscal and monetary, and that seems to be somewhat coordinated now, not only in the U.S., but also in China now, and other central banks are cutting rates. So that tends to allow multiples to expand further. You know, I would say 3 weeks ago, myself and most of the clients I speak with were in the camp that we would have a tough 4 or 5 weeks into the election, and then you'd get a strong rally into year end. But I'm starting to think maybe it might be more the opposite. We may stay bid into the election, and then I think we get some disappointment post-election on the idea that fiscal's kind of peaked, right, into the election, and also the Fed then is in fully priced, and then it comes down to the numbers. Can we continue to deliver the numbers that justify the multiple expansion we've already had?
Well, we're going to talk more about politics and the election in the next block. I want to go back to what you were saying about earnings, though, and the earnings breadth revisions. There was a really interesting note out from Torsten Slok over at Apollo this morning saying that 42% of companies in the Russell 2000 have negative earnings. For the S&P 500, for contrast, those big caps, that number is just 6%. So even with these revisions that you're watching so closely and the idea that maybe the Fed could cut more aggressively from here, I mean, how careful do you have to be about where you're picking your spots?
Absolutely. We talked about this last time I was here. Like, we don't hate all small cap stocks, right? I mean, we hate the Russell because it's a low quality, we don't hate it. We think it's a low quality index, and therefore in this kind of environment, that's not the instrument you really want to be long. That doesn't mean there aren't some wonderful small cap stocks within that. And this has been a very high alpha generating environment for a lot of our clients are doing quite well generating alpha this year because there are some very good longs and there are some very good shorts. And I think that's the way we're continuing to approach it, whether we're talking about small, large cap indices or even within sectors. And there we've been very clear. We want to continue to stay up the quality curve. We're not willing to go down the quality curve. We don't think things are cheap enough. We don't think the Fed is far enough ahead of the curve yet to stimulate interest there. That could change if we see the labor data improve.
All right, Mike Wilson, we are just getting started. Sit tight for a couple minutes. Let's take a quick look at what markets are doing. Of course, 20 minutes to go until the bells ring. You can see on this final trading day of September, which was supposed to be not a great month.
Okay, I really enjoyed that. I got it, Curious George. I saw your second note there. Thank you for that. Yeah, so I actually really just enjoyed what Mike Wilson just said. So first of all, hiring may slow in October due to election uncertainty. Very interesting, because you won't see that until early November. The other thing that I really enjoyed is his argument that earnings revisions breadth is a critical leading indicator. It's usually negative in the first half of October. And this is going to be something that can actually lead us into earnings where the first 2 weeks of October we'll be able to evaluate, okay, how are jobs, how are CPI, how were earnings revisions breadth, right? So first 2 weeks of October, let's write this down. Look for, we would want to look for, to be bullish, I'll say to be bullish. You want to look for strong jobs, ideally growing again, right? Then you want to look for positive earnings breadth, earnings revisions breadth. Okay. Then you'd want to look for low or stable CPI. And let's see here. Some Powell, confidence would probably help, right? That's to be bullish. And to be bearish, you're going to watch for weakening jobs in September, October report, released October, November. And more negative revisions than seasonally expected. That's a good one. You probably want to see still stable CPI. Otherwise, you have big stagflationary issues. And then obviously a dovish Powell would be useful to stop the pain. So I think those are some pretty useful leading tells for us, and so we'll keep an eye on some of those. But I did appreciate that from Mike Wilson, who's been a bear for a while, but he flipped to bullish the megas, and certainly bearish small caps, which I am as well. I think I used the R word to describe it, suggesting it would be basically, R to go into small caps if we have a recession. It's the worst place to be. Like, I would rather be all in on like Microsoft or Nvidia and Apple, right, than exposed to small caps as you're teetering on, are we gonna have a recession or are we not gonna have a recession? So, but hey, it's to each their own, as we always say. So that's a big part of what we'll be talking to folks about in their financial advice plans at stockhack.com starting tomorrow when the service begins, is evaluating, are you properly hedged? How well are you positioned? How well are you diversified? Are you exposing yourself to real estate? What about your business? Are you exposing yourself to stocks? Right, all of this is helping you stay accountable. If you say you're going to buy the dip every time, you're getting a text message from us going, are you buying the dip? Right? So we're pretty excited about the financial advice service. And we'll be able to blue text with you as well, which will be pretty cool. If you're a blue texter. If you're Android, you'll get green. So that was good. I wonder if they'll give us a little bit more of Mike Wilson there. They sort of implied that they would, but I haven't seen him come back. Anyway, 13 minutes to the bell. Doesn't look like we got anything out of Bowman anymore, so I'm going to close that. No data yet. Oh, Carnival's out. Okay, Carnival shares down 2%, and the Carnival Cruise Lines, CCL. All right, what's the data here? So Carnival Cruise Lines comes in with Q3 adjusted EBITDA of $2.82 billion versus the $2.67 billion expected, which is a beat. Okay. Let's go pull the stock quickly. So the bottom line beat for Q3. Q4 EBITDA slight miss though. Oh, now it's up. Oh, look at it, touched my line. Q4 adjusted EBITDA 1.14. Yeah, it's a seasonally slow time versus 1.15 billion expected. Miss. That's nominal. Let's see here. Any commentary? Revenue Q3 beat slightly. They raised full year guidance. Okay. And then we have I'm trying to see if there's any other commentary. I'll look for more while we listen to Mike here.
And then we have a margin pressure. And for the Fed, I mean, the Fed then has to, if let's say this thing doesn't get negotiated, or it does get negotiated in a way where wage increases are significant, does that factor into 25 or 50 next meeting? So there's a lot of implications here. These are messy situations. I'm not optimistic, unfortunately, that it gets resolved this week. Probably need some more action before the two sides come together. But as I said, I think it's the length of the strike that will then determine the magnitude of the impact.
You're not known for your optimism.
It's not true. Well, I'm generally a half glass full guy, but in this case, I think this is a tough one.
Yeah, well, I was thinking, what impact could this actually have on the markets? And interesting story, politically and economically. But then I remembered what happened when that evergreen boat got stuck.
That was amazing.
Yeah, in the Suez Canal. And those supply chain reverberations lasted for more than a year.
Sure.
You know, I mean, Aston Martin right now its profit warning is because of supply chain problems more than it is China. Do you expect this could be a real problem at that scale?
Well, sure. I mean, we had the port issues during the pandemic where you couldn't get workers to unload the cargo.
Yeah.
So it's just one more example of how fragile some of these supply chains have become pre-pandemic, right? We've gone to this just-in-time inventory system, globalization, and manufacturing goods halfway around the world and then shipping them from there. And so, you know, I think this is part of the bigger question. Like, how are companies thinking about managing inventories, managing production, reshoring, et cetera, going forward? This is just one more example of that. And labor costs has been something that's been a real tailwind for 30 years, and maybe we can't be that confident about that anymore.
Well, as you both point out, I mean, we've been through this before. We've seen this movie before, and the argument is out there that companies maybe are a little bit more flexible in their supply chains, so that maybe they know a little bit more how to handle these sort of crises.
Well, here's the question on that note. If you're worried about wages going up being potentially inflationary, if you're worried about inventory shrinking here to the extent that you have to raise prices, then wouldn't both things be inflationary? At the end of the day, do you still worry about the trajectory of inflation when nobody seems to be as worried about it anymore, except maybe if you're Michelle Bowman?
Yeah, I think.
Yeah, it's just Michelle Bowman. Yeah, no kidding. Carnival Cruise Line's noting strong demand. Half of 2025 is booked already. 2026 is off to a strong start. So they're very optimistic here. Obviously, I would argue that optimism is unlikely to wane until job losses hit, if they do. Yeah, very interesting. So, Kevin, how do we know your staff is qualified to give financial advice? It's not about the staff. You have to think about the staff as people talking to you on the phone and collecting your information. It's about me, taking this information and working with them to convey ideas and strategies and plans to you. So, in my opinion, at StockHack, you should be thinking of, these solutions are coming from Kevin. Now, if you don't value Kevin's solutions for your life, that's fine. You could try it. If you don't like it, you cancel. If you don't want to try it because you don't value it, that's fine too. If you're like, hey, what a lot of people are doing is like, all right, I'm going to try it for 6 months and let me see. And then, can Kevin and his team hold me accountable and help me build my wealth or expand my business or, whatever it is. I think these are all really phenomenal, opportunities to work together. Of course, for me, these are like 10-year trajectories where, we build a business that we can help people with for 10 plus years. So it's great. Good question, though.
Terrible for stocks. Actually, it's not true. When inflation was booming, that's when we had the best breadth in the stock market. That's when the Russell 2000 was doing really well because that's their pricing. That's their nominal GDP growth. That's their nominal revenue growth. So I think, to me, a unified government on the congressional side, you get more stimulus, probably better for stocks than bonds. If rates go up too much, obviously it's not great for stocks.
Mike, great having you, and thanks so much for joining us. Mike Wilson there from Morgan Stanley, U.S. Equities, Chief U.S. Equity Strategist and CIO. Coming up, Ford's new incentives for its EV customers. You're going to see more automakers coming out with price cuts and incentives. Details next in Social Climbers. This is Bloomberg.
Ooh, Joe Castro says, excited for the Mastermind this Saturday. That's true. We have our first Mastermind meeting this Saturday. That's going to be really special because these are entrepreneurs and business owners and really successful people in their fields. It's going to be a great group of people. It's going to be really fun. So that's that'll be remarkable. All right. So let's see here. Okay, so port strikes transitory. Well, wait for the what's it called? The video that I've got coming out. That'll post in about 20 minutes. About 5 minutes for market open. So that'll be fun. Let's see here. I only want Kevin advice. Yeah, well, Again, the way to do it is you just have to trust that I'm building a team that that works with me, and you have to trust that my advice filters through. So that's the way to look at it. Yeah. Southwest thinks it will double revenues by a couple of inches of legroom. Wow. Yeah, I think that's sort of been the long-term thesis, is that you just sort of like squeeze chairs further and further together. Kind of rough. It's already tough. Hotel room booked and ready to learn. That's awesome. That's awesome. What are you most looking forward to, Joe? What are you trying to get out of it? What's your big thing? Are these similar to Tony Robbins' Mastermind seminars? I don't know what Tony Robbins' Mastermind seminars are. I know he does big events. This is small. This is like 25 people, so it's very small. I don't think we have any seats left for it. You'd have to go to meetkevin.com/mastermind and set up a call there to see if you could still make it this Saturday, or if you'd have to wait for next quarters. Yeah. How was Michelle Bowman? I missed it. Nothing new there. She just reiterated the same thing she's reiterated. Inflation is still too high. Can you give me your sentiment for today for BTC? Well, I mean, it's been falling, so the trend has been down. We peaked out here over the weekend. We were pretty stable there at over 66K for a while. But yesterday, as futures across the world started opening, you started seeing the Nikkei fall. You started seeing Bitcoin drop with the Nikkei falling. And we thought that was very interesting. Porch Monkey says, "Why do you behave so childish?" Because I'm a child. Have you not woken up to that yet? When you in Miami next? Any events planned for here? Well, we'll probably at some point do a mastermind in Miami, but I have no plans of going to Miami anytime soon. Cruise ships are petri dishes of disease. Yes, that's why I'm going on one in October. See, the market was destined to crash because I'm going to go on a vacation in October. Kevin is the only financial expert I will ever put on now. Oh, well, thank you for that. Not always right, but, certainly try my best. So, yeah, Bads, my team isn't only 20-year-olds. we've got, everyone from 30-year-olds to 60-year-olds to 70-year-olds to me. So we've got a team of a lot of people. Really, it's a really good team. So we're really excited about it. So let's see here. What do you think about getting back into training stocks? I think temporarily, you have a play of like K-Webs or Neo and stuff like that. Just be careful. A lot of the pre-market is super low liquidity, so I wouldn't be surprised if you could see like a Neo tank. Initially, you could see like a big run up, but I wouldn't be surprised if you could see a tank here. Mostly because, are you going to live stream on your cruise? Probably not, because it's like hell to live stream from a cruise unless they have Starlink. Although then again, I always wonder about the what's it called? The upload bandwidth is usually pretty trash. Yeah. Maverick says, "Oh, hello there." So don't always agree with your opinions, but you have great insight and knowledge. Well, thank you for that. Well, I mean, that's the idea too, right? Like if you hire a financial advisor who just tells you everything you're doing is fine, then what's the point, right? Like, you need a contrarian opinion. Kevin, you need to introduce your team. No, I don't. You're like, the way you got to look at it is you're getting Kevin via people I have hired and trained. So if you don't like that, then don't hire it. Bring your own Starlink, Kevin. That's true. Oh, yeah, that's a good idea, actually. I will have my Starlink with me, so I could just set that up on the cruise. Not a bad idea. I'll be streaming from the porch deck, from the poop deck. That's actually a really good idea. I like that. Okay, I'll just bring my own Starlink. I like it. I like it. All right, let's get the bell.
At Times Square. Let's get that opening bell and the CNBC Real-Time Exchange. As we said, at the NASDAQ, it is CNBC celebrating 25 years of programming at the NASDAQ market site in Times Square. Our president, Casey Sullivan, Becky Quick, Joe Kernan, Andrew Ross Sorkin, Melissa Lee, and the traders all doing the honors. At the big board, medical equipment company ResMed celebrating 35 years.
I know a lot of people feel that they may be challenged by GLP-1 because it does work on sleep apnea. When I deal with the company, I feel more confident that that is not necessarily going to be the end existential threat that I once thought it was. And a lot of that is because Mick Farrell is quite a great CEO. He's true. He's been on the show a bunch of times. He's a very inventive guy. I'm not writing off ResMed. I just can't do that. Too good a company, David. Okay. And take a look at the chart. The chart is about how people realize, wait a second.
Okay, Bitcoin just under 64K. TLT's positive. Microsoft down about 33 bips, 53 bips on Amazon. Nvidia still down about 2.2%. Tesla's down about 72 bips.
I think they will lose this one too. And then after that, I think there'll be a skein of victories because then they'll be out of this jurisdiction from hell for the defendants.
What do you make of Stellantis joining VW, BMW, Mercedes, today Aston Martin, just this overall cloud of what the Chinese have done to the global auto market?
Oh, I got to tell you, just having come back, Stellantis really, really hurt here, down 12%. I mean, look, these cars are $10,000 cars, and they're great. I don't know what to say. They're great, and it's kind of like Starlink. I mean, when you let them in, you really are changing the whole dynamic of your union.
Tesla's about to go green, though.
And I think that China was smart. They felt that they could get a lot of the German, 25% of the exports from Germany go to China when it comes to cars, but they got the last laugh, China. They sure did get the last laugh, and I think that everybody realizes it was a Trojan horse.
We should give the specifics, which are essentially, they are now penciling in an adjusted operating income margin of 5.5% to 7%. They had been as high as in the low double digits in terms of previous outlook for margins. Of course, remember, it's Chrysler, it's Dodge, it's Jeep, Maserati as well, a part of their lineup, guys. And I mean, to what you've been discussing, obviously, how much of this is competition in various markets from the Chinese, particularly their EVs, which, as we talk about almost every day, have increased substantially in quality.
And there's Ferrari still up 40%.
And are extremely, well, that's a piece of art. That's the art market.
That. Yeah, that's the art market. And Sotheby's isn't doing that well, so maybe it's something better than the art market.
Yeah, maybe it is a little better. Yeah. Although, Christy, Sotheby's has its own specific issues. The art market is weak, but Sotheby's, and obviously an enormous debt load. They did get that deal done with Abu Dhabi, I believe. Though.
How do we say that you can own Ford? They have overseas. GM, they have overseas. I don't know.
We had BMW warn a couple of weeks ago.
Oh, no, I'm just saying that our own automakers are not immune.
Well, this morning, Axios has a piece that Ford is going to start giving new buyers a charger, an EV charger. And if that catches on, they say they could extend that program even further.
All right. So that's interesting. Trying to see if they have anything interesting. Not really. Okay, so what's moving? Let's take a look here. We've got Tesla that moved up. Now you're at 29 bips to the positive side. You've got, let's see here. Alibaba is still up about 2.6 on Alibaba. K-Web's up about 3.5. Both of those are falling. Nvidia's rising, and the Qs just broke to positive in just the last 3 minutes here. Bitcoin's trying to move up. Let's see here. JD's trying to pop up. Tesla's doing really well. Yeah, I mean, look at this. Let's go right here. Tesla doing pretty decently right now. So let's see here. Oh yeah, look at that. 67 bips. Okay. How are the Chinese stocks doing? Still trying to pick up here. A little bit of a downtrend. Okay. I'm trying to see what's the SPY up to. SPY's rocketing. It's almost like people are moving from some of the Chinese names to some of the U.S. names. Honestly, it feels like a little bit what's going on here. So one of the predictions that I had was that you would end up seeing potentially Neo and some of these other Chinese companies move down. I think that's kind of what you're starting to see. It's always the opposite, I feel like, of what the pre-market trend is. You do have... What is this? You have... yeah, you see, you're really having a hard time holding on to this this rally that you had in the pre-market on JD as another example. You're seeing it as well on Neo here. Then you're seeing Tesla Tesla popping back to its 260 line. It's having a hard time holding on to that as well. All right, let me try Jimbo for a moment, and we'll try Doomers next.
There's hundreds of satellites. Just wait till they put that Starship, they get Starship going, and he can put out, it can release so many hundreds of satellites at one time.
Right. This morning, he retweeted a comment that he's on pace to be the first trillionaire. And in his words, he says that's the plan, so he can finance our migration to Mars.
Oh, okay.
To Mars.
And then he can populate Mars.
What are we doing Mars? What's the plan on Mars?
So much.
Lot to do?
So many fun
lot
things
of
to do.
sites?
So
Grand Canyon
many.
there?
I can show you some real canyons. I got some real estate, by the way, for you.
Yeah?
It's going fast, but if you're interested.
How much is a 3-bedroom Mars?
You're interested,
What are you getting for a 3-bedroom Mars?
If you're interested, we can talk.
Okay.
In the meantime, we're left with things, I guess, like theme parks. By the way, upgraded Disney today, Jim, over at Seaport.
Yeah, that was a mea culpa piece. My travel trust owns Disney, and I'm really stupid that I did that, let me tell you. Because whoever seems to run it seems to fall back on the possibility that maybe theme parks are not that good. They got to expand theme parks. Let's talk about Disney Plus extending its paid sharing program.
Please, more theme parks. I'm a big fan.
Made me feel the best thing about this piece was this is a mea culpa on our outlook for Disney, not their better macroeconomic underpinnings. If you want macroeconomic underpinnings, can I just say you should go buy Stanley Black & Decker or Home Depot. You don't buy Disney. But Disney's been moving up. I don't know. David?
Well, we got Carnival with a nice double.
Jim Cramer just said, don't buy Disney. That's really bullish, Disney.
$7 billion net. That's a
And
good number.
we know what cruises increasingly mean to Disney.
Yes, they get some more ships. David, the problem with Disney, I'm going to give you this to tee it up, kind of like the Peanuts cartoon, linear TV. What are we doing there?
It's not a good business, Jim.
No.
Not a good business.
No.
I wouldn't recommend going into it.
Yeah. Well, you want to own? How about NBA? Is that's the ticket?
What about the NBA?
You buy the NBA, everybody watches. They get rid of everything else. They watch NBA.
Q's dropping a little bit now. I just see a red candle forming on the Q's. Neo's still downtrending. Tesla's doing well. It's moving up. JD is still moving down. PDD still moving down. They're obviously still very positive. But they are giving up some of those juiced gains that you had earlier in the day. Google capped out. That might be why you're getting a little bit of a capping out on the Qs. You're getting Enphase negative again, probably really just because you're seeing yields that are moving up rather than down. Tesla's now up 1%. It's almost like people were taking money from the Chinese plays and throwing it into Tesla in anticipation of Robotaxi Day. Which, obviously most people think will be a big buy the rumor solid news. Stellantis still down 13%. You've got Nvidia is almost going to go positive. I mean, it was down 2.5% in pre-market. It's only down 50 basis points now. So honestly, that one's doing very, very well. Nvidia trending up nicely. Neo just took another dive down. Nvidia continues to trend up. Neo, mind you, it's still up 11%, but Tesla just capped out a little bit, and now it's back down and only up about 77 bips. You've got Let's see here. Baba 285, trying to stabilize a little bit. Trying to see what else is going on here. Okay, now we got some. This is all over the place. Apple starting to rotate down a little bit. Let's see here, what else? Ubiquity's down a bit today. Palantir's down about 84 bips. IWM's only down 5 bips. It's not that bad.
Where people go in and just basically take stuff off the shelves and walk out, and they don't get arrested, or if they do, they're out of jail within.
So sad. They got to fix policing. It's, mostly, you need funding and the authorization to arrest. Jeez.
Yes, and basically you wouldn't buy anything. You got to press a button, and nobody ever comes.
It's going to be QR codes.
That's not the issue here. That is simply not. It's about the healthcare business, which represents roughly 75% of the company's profits. For example, Aetna, Caremark, these are the key parts of the business, right? The PBM and the insurer. They mispriced 1.1 million Medicare Advantage policies, cost them billions, 2 to 3 billion in the Medicare Advantage losses. That's where, if you are an activist, that's where your issues are probably centered. They put themselves in an over-leveraged position. They paid $11 billion for Oak Street, this healthcare business, far above where what the business, again, those who would be critical of the company would say. They had a guy named Brian King come in. He was hired to run Aetna, and then he was immediately fired, even though he wasn't responsible, is my understanding, for the pricing.
Yeah. Okay. All right. Sounds like ranting. NVIDIA just topped out a little bit. Tesla's having trouble getting over that 1%. The Doomers are on commercial. K-Web's up 4%, so you had a little bit of a recovery here. Bitcoin's still under 64K. Neo's struggling. 736 seems to be 5-minute-ish resistance here. Somebody here says, what are the chances Palantir was involved in the walkie-talkie situation? Honestly, probably pretty good. I think Palantir's intelligence service is frankly really good. Carnival Cruise Line's down 3.4% on the margin misses. Kind of surprised by that. I would have expected to see a little bit more of a pop after those earnings, so a little surprised. But yeah, Palantir in general, I've always been a big fan of Palantir as an AI play. I think they're one of the best AI plays that exists. The problem is price. Their valuation is, I hate to say it, but it is kooky dookie right now. And I'm not trying to be anti-Palantir. I'm just trying to be like pro-reason. I can't pay a 4 peg for them. I don't think their growth is going to be so substantial, although maybe it'll impress the upside. It's already priced in at 23-ish%. So what's going on with Amazon? Is Amazon selling down because of the port worker strike? And my other video is about to... Oh, yeah, look at Amazon get rejected at 188, basically. That's an important line to watch. Another thing to watch, I'm watching... NVIDIA is not holding right now. And what else is going on? Yeah, NVIDIA just schmooped down a little bit. Not a horribly big deal there. Okay, I'm going to push back my port video 5 minutes or so. Yeah, okay. Probably, I mean, retailers like Amazon, they're the ones that are going to get hit in a port worker strike. Just because everything becomes more expensive for these companies. And they're the ones that are going to, unfortunately, have to pay for it, which sucks. Yeah, here goes Amazon just ticking down a little bit more. Tesla's doing very well, though, again, as it just sort of runs into this enthusiasm over, frankly, the, what's it called? Robotaxi event. So, okay, yeah, look at that Tesla run. That's really impressive. Okay. Let's see here. What else? Oh, good. A little bit of optimism coming into the market here again. Q's moving up. K-Web just popped up a little bit. It's like you sold off at the beginning of the day here, and then you just popped up. You got, let's see here. No, Apple's almost up 2%. That's pretty good, actually. Ubiquity's down 1%. Enphase back to flat. Chipotle, ooh, that makes me hungry. I was always thinking about Chipotle. I just get hungry. Yeah. No, very good, Tesla. Good run here. Okay, let's somebody says Chicago numbers came out. Let me see here. Yep, Chicago PMI came in slightly better than expected. That could be helping. 46.6 versus 46, still in contraction, mind you. Just a little less than expected and a little bit better than last month, which is again better than expected data is a good thing. NEO finally got through 736. It was having some trouble at 736. It's finally through that. Although I wouldn't be surprised if it bleeds out through the rest of the day. But some of that downtrend has slowed. Uptrend seems to be continuing on Tesla. Downtrend continues on Amazon. K-Web keeps going. Q is now positive. We saw that. Apple doing decently here. Yep, JD, PDD, these guys, all the Chinese stocks bottomed about 3 or 4 minutes ago. I thought you might actually get more of a leg down, like a really rapid down. You didn't, which is actually pretty impressive for the Chinese stocks. Palantir's recovering, Microsoft's recovering. All right, pretty good. Yeah, Tesla keeps going. All right, what else here? What else? Tesla 280 at the end of the week, says someone here. Somebody says Tesla deliveries tomorrow. Yep, that's true. There's a lot of excitement about a beat for Tesla tomorrow. Somebody here says Legacy Auto is screwed. Stellantis and VW guiding down while Tesla continues to steamroll everyone. Dude, Tesla's deliveries are flat year over year. I wouldn't call that steamrolling, but yes, Tesla's great. I prefer them over the legacy autos for sure, but their growth is flat, so I think it's kind of important to consider. Your what's it called here? Your enthusiasm. Curb your enthusiasm, sir. Oh, all right. So, there's that leg down on NEO. Look at that. Legging down on NEO some more. Wouldn't be surprised to see the Chinese stocks leg down more, but you have to be watchful because this is a pretty solid floor right now. Anyway, if you have questions, by the way, about StockHack, keep in mind you're always welcome to set up a free call with us to see if the service is right for you. Just go to stockhack.com to fill out your info. All right, I'm gonna push the button. Go watch my port video. It posts in like a minute. You'll see it. Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate and actively manage ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than HouseHack, nor am I presently acting as a market maker. Tesla's giving up a little bit here. Don't buy. But it's only been 4 minutes. Almost at a 5-minute downtrend. Alrighty, y'all. I'm going to post that video in like 5 seconds, and then we'll see you in the course member live stream. Goodbye, everyone. Good luck. Go check it out on the main channel.